Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Wayne Evans, who is the CEO of SBS Bank. Welcome in, Wayne. Good to see you.
Thanks for the invitation.
Look, you've been in the hot seat about 6 months now. Obviously, you've implemented a few changes at SBS. We've seen you very active in the home loan market, which is always interesting for us. Look, I guess just interested to talk about initially. I guess you're one of the smaller banks in the country. Keen to hear about what you're doing to differentiate yourself, and I guess if I'm a potential borrower out there or saver out there, why should I look at SBS?
Well, look, you're right. I've only been there 6 months, but I have a long history with SBS. I started my career there in 1984. What is unique about SBS, it is a building society that happens to have bank registration, and we understand that as the first such arrangement globally. What we have been working on over the last 6 months is establishing the strategic framework and direction of the bank. Clearly looking at what our vision statement should be, what markets we want to target, what indeed our point of differentiation is. Our vision statement is to be New Zealand's member bank. So that reinforces both our history of a building society and focused at member outcomes, particularly those that help people into their first homes. It also talks about the fact that we want to focus on niche markets and serve those very, very well, as opposed to trying to be all things to everybody. The point of difference is, I guess, that as members, they are also owners and also customers. So our owners are our customers. I think in other organisations where there's a shareholder-customer split, the benefits flow one way or the other. What we are able to do is strike a balance between profitability, asset growth, benefits for even the team members and for those for investors and borrowers. And typically that's taking the form right now of preferential pricing, and you've seen some of our market activity right now.
So how would I become an owner of SBS, and what advantages would I get from being one?
Well, look, you simply become a owner member by, under our rules, either borrowing from us or investing in a certain class of investments. So there's deposits which are ranked higher in security versus shares, if you like. They're not equity shares, but they are shares in the building society. And through investing in that class, you become an owner. Now, what that entitles you to do is vote for our board of directors, so you can participate and influence the governance layer of the bank. We are right now working through what member means in tangible terms. We see a lot of activity in relation to defining benefits, giving away cash, TVs, cell phones. We've decided to give our members choice, and choice by leaving money in their back pockets, by charging them less, or for investors actually paying them more. But either way, it leaves more money in their back pocket, and they can decide how they wish to spend that money.
Are you looking at possibly going down the rebate route?
We already are. So there are some fees that we rebate just to reflect the value of the membership. What we are working pretty hard at doing is trying to reflect the length and depth of the relationship. So right now we are valuing transactions. So people borrow from us, they invest from us, they start up a KiwiSaver account, and they receive some benefits through that transaction. But look, if we are a member / relationship bank, then we need to start looking at the nature of that relationship, and that can only be defined over time. And so we want to reward people in a continuous way, and we're just working that up now.
Now, SBS also includes Finance Now, which is the personal finance company, which obviously you were one of the co-founders of, and you've got the Funds Administration New Zealand. You just announced a deal with Staples Rodway in the KiwiSaver space. Can you tell us a little bit more about what you're looking to do with those subsidiaries and how they can, I guess, help SBS grow?
Well, you will be aware that we've gone through a strategic review. Through that review, we looked at the role that all subsidiaries play, and indeed the bank plays, and we've, I guess, assigned roles. Now, the roles of the subsidiaries are asset and profit generators. That's obviously an outcome that we're all looking for. But I guess the second primary benefit that they can deliver for us is acquiring new relationships. So new policyholders, new investors, new borrowers, consumer borrowers. And in that way, we can, I guess, establish relationships with people that bank somewhere else. And then through our relationship model, through great service, great pricing, we actually start to deepen that relationship over time. And so Finance Now in particular has a big database that is predominantly reflective of the spread of the population through the country, but obviously heavily domiciled in Auckland. And so we're wanting to expand our operations northwards. And so using that database to promote our products on a bank group basis is a very real opportunity for us. So then we look at Staples Rodway. Again, two companies, Bank and Staples Rodway, share long proud history. They predominantly North Island based, we South Island based. It's quite a nice marriage of brand, of capability, and of distribution and origination capability. So again, we're trying to, I guess, establish relationships, product and service set, strategic capability within our subsidiaries to acquire new-to-bank relationships that then will broaden through our relationship model.
Now, we've seen over the last couple of years SBS often coming out with home loan rates that are the lowest carded rates in the market. The most recent example is your 4.99 5-year rate. How's that one going? How's it being sort of taken to by customers?
Oh, look, it's met with wide acceptance from the market. You're probably not surprised by that. Right now, I'm in the midst of a strategic plan roadshow through the network. So last night at the Heritage, we had a big-sized team in. Mobile mortgage managers, branch staff, for a change, complaining about not being able to get to all the inquiry that's coming their way. And certainly if somebody's experiencing service levels that they wouldn't typically expect from us, so I apologise now. But look, there's heavy demand. Not surprising because it is a very attractive offer. But look, perhaps behind your question is why would we do that? Because we have shaved margin, our profitability would be lower for this. But the nature of the offer is less about rate for us, and it's more about time with that customer/member. So we all of a sudden have 5 years to establish the banking relationship with these borrowers, so they can start to buy more products. They can actually start to understand our membership story, and as a result, through referring friends and family and so on, we actually start to build a big member base, asset base, liability base. We become a bigger, more profitable bank as a result of that.
It's another interesting side to it is it highlights some of the recent longer term offers we've seen. Obviously, TSB came out with a 10-year offer. A couple of questions is, I guess, firstly, is 10-year term something you might also look at? But secondly, New Zealanders have tended to, when they fix, fix for shorter terms. 2 years has tended to be the key one. Are you seeing greater interest in people fixing for longer terms? Is that part of the reason you went down the 5 year?
Internationally, long-term borrowing is not unusual. 15, 20-year fixed terms aren't unusual. But in New Zealand, I suspect that culturally we're very optimistic people. So we always expect their house prices to go up, and perhaps in this respect, interest rates to come down. And that's why people are taking the decision to borrow shorter term. TSB and Kevin Murphy and his team did a good job launching that 10-year product. I think it generated a lot of interest. I'm not sure that it will generate a lot of inquiry for them because perhaps 10 years culturally in the mindset of people is just a little bit too long. We decided that 5 years is about right. I do think that a wise borrower will look to spread their interests across floating and other terms shorter than 5 years just to manage their own credit rate risk. And we're certainly looking to provide that guidance to people to consider that. But look, as I said, heavy demand now for 5 years, and maybe perhaps culturally we'll get to grips with this 10-year concept.
Another thing we've seen from SBS in the last couple of years is you've pushed into the Auckland mortgage market, home loan market. How are you finding it? I mean, how are things going? Are you getting a lot of growth out of Auckland? And also, I guess we hear regularly about Auckland house prices are up, 10, 15%, whatever it is in the last year. Graham Wheeler's worried about it. Credit rating agencies are worried about it. To what extent do you need to be cautious in Auckland as well?
Look, all banks need to be cautious about lending, and that's why we have credit policy that manages exposure both on a debt servicing ability and a security basis. So we're probably no different in relation to other banks in that regard. Auckland is an important market for us all. If you want to be a nationwide bank, you need to be able to bank Auckland. We traditionally have focused on our North Island base and performed extremely well there. But look, there is significant growth in the market here and in other North Island provincial and metropolitan centres. And so I guess what we're looking at is how we optimise our distribution strategy to fit an Auckland model. Historically, the absence of a large branch network was to our disadvantage. But now we don't have a legacy issue in relation to a big footprint. So it allows us to invest in digital capability. It allows us to invest in a fleet of mobile bankers, so your AFAs, your mobile mortgage managers. And so we've right now taken that tact to look at a virtual network, and sense that mobile mortgage managers, AFAs, and even the broker network are extremely important channels for us as we enter this market. I think as we build up our member base here, we will certainly look to increasingly put a physical footprint here. But look, those other channels are our priorities right now. I just want to expand on this point. Why Auckland, and particularly why 499? There are a number of gateway products that we've identified. One is the mortgage, one is personal loans, and the other one, KiwiSaver. So these products we wish to, I guess, win on a transactional basis, price them well, get them in the gate, perhaps get them to start entertaining us as an alternative to one of their other providers, and then look to flesh out that relationship. Hence why we're looking at price, we're looking at availability quite hard.
You mentioned earlier that another part of your strategic review is looking more at niche markets. Now, you are already active in reverse equity mortgage market. Is that going to be a market that you target in future? And are there any other particular niche markets that you are looking to go for?
Well, look, it is a market that we're very excited for. And the changing demographic profile of New Zealanders would indicate that it is a growth market. And I think the challenge is not so much our willingness and others' willingness to provide the products, I guess the market's appetite and trust of the product. And it's one that probably needs to be considered and purchased not only by the person with the house, this is a reverse equity mortgage against a home, and so the money's gradually released, but the next generation, so the people that might be looking to inherit the estate, they need to understand what mum and dad are doing in relation to their inheritance. And so there's an education component to that target market, broader than just focusing on borrowers. So there's definitely a target market. Look, the other area that we're focused on right now is expanding our agribusiness and commercial capability. We've had some success, particularly on the back of existing retail member relationships, but I think we just need to lift the complexity and capability of our team and broaden our wings, so to speak, into growth areas. Luckily, we, in this respect, are in Southland, a very successful provincial economy, and there's certainly a rich opportunity there, as there are in Taranaki and Waikato in the agri space.
Are those areas you're particularly looking at as well?
Well, certainly Southland and Waikato. Reason for that is we already have a physical footprint there. Our brand is well known, and we can easily house more personnel there. And as we bring on these virtual channels and increasingly digitise our business, then it'll just grow from there. Now,
prior to you becoming CEO, obviously when Ross Smith was in the role, there was the merger or takeover of with HBS, and quite a bit of talk about creating a sort of national community-focused bank. Obviously, it's gone pretty quiet on the M&A front, the merger front. Is that still an area where you would like to see SBS do more deals? And what do you actually expect to see there, I guess, among some of the smaller banks and building societies in New Zealand in the next few years?
Well, look, the strategic review we've completed identified some product service gaps. And if we look at M&A, we can say, well, we can either build it, we can license it, or we can buy it. And so M&A is actually part of that equation. Your question is more about consolidation in the industry. We're not actually chasing that as part of our strategic direction, but look, we are actively supportive of consolidation, and I think that's forced upon us by the increasing regulatory complexity and the costs that are associated with that. I think if we look at competing successfully against some of our better and certainly significantly larger Australasian banks, we need to pool resource, pool capability so that we can compete on more of a level playing field. And so that second tier bank, we certainly can have those discussions about a centralised pool of support services. And certainly for us, somewhat uniquely remaining a building society and remaining our mutual status, other building societies and similar certainly would invite them to talk to us.
But there's no talks going on at this stage around either mergers or around sharing back office facilities?
No conversations that we're sponsoring, albeit that 6 months into the job I need to focus the home fire first. But look, we'll certainly start to connect with other bank heads, building society heads, and see if there's any area for mutual benefit.
Well, thanks a lot for that, Wayne. That's Wayne Evans, who's the CEO of SBS Bank, and I'm Gareth Vaughan at interest.co.nz.